All right, so let's hop into the charts. Let's review what happened Wednesday into Thursday. I was absent Wednesday late afternoon. I didn't get an update out. I, Wednesdays tend to be my busiest days of the week just because I have my son. I gotta prep him for soccer, take him to soccer, and we had a pretty long practice Wednesday, so I didn't get to roll out an update, so my apologies on that. But let's go ahead and review and what we're looking at into Friday session. So first things first, okay? On Wednesday's trading newsletter, okay? And I highly advise to go check out that market review I sent out Tuesday evening, heading into Wednesday. Okay, because I really advise to practice risk management onto the upside. We did see the market drop, and these are the type of things I talk about. Everyone else was surprised. I hope y'all weren't surprised. I wasn't surprised. Okay, I strictly advised not to chase the market at these higher areas, especially if it was your first trade setup of the week. If you missed Monday, you missed Tuesday, you're feeling FOMO, now you want an urgency to make something happen. I strictly advise that this is not the area to do so. Okay? And just to review those things is, let's see, give me 15 days right here. All right. Now, let me pull up, where is it? Okay. We've been knowing for over a week or so that this red area right here is a seller's territory. And I tried to explain it the best that I could on Wednesday's trading newsletter. Okay. This is a seller's territory. Now, what does that mean? Well, this means that the market attempted to establish in this area, and the market failed and resulted in a breakdown of 68.15. Sellers triggered 68.15. And what that signified to us is that, all right, this is a seller's territory now because sellers stepped into this part of the market and they put a significant move off this area of the market. Okay, the first one being over 2 weeks ago. Okay, on March, on Friday of March 6th, the market broke down this range, and into Sunday's afternoon open. I don't care what headlines there was or anything. You can say it was because of this or that. Whatever you want to try to make sense of it. Which in reality, the market doesn't move like that. But the market gapped down after failure of this range, and within a couple candles, it set up a 200-point drop. Okay, this is a very significant reaction. This was a buy zone we had on watch. We took longs on this. You can go back to the newsletters, check it out. It's all there. Market ran up, and we went right back into this breakdown area. Now, over the next 3 sessions, the market attempted to reclaim this breakdown area. Okay, but the market failed. And what happened? Sellers pushed the market out of their territory, and 2 to 3 sessions later, we ended up at our home base. We picked up liquidity. This was on this Sunday, okay, and I was active at the open. We took longs above, or I took long above 66.61. It was a setup that I really talked about. above 66.90 longs worked as well. And this retest of the buy zone, we eventually worked our way back up heading into Wednesday session, putting us right underneath this breakdown area. Okay. Now, what I advised on here was, seller's territory. Okay. And what that means is that any rallies into this area can continue to get smacked down quickly and aggressively. Think about it like this. This is Area 51. Okay. Several miles away from Area 51, you see warning signs of no trespassing and, a bunch of warning signs. Okay. Nothing really happens. You can assess your own risk if you want to keep moving forward or not. Okay. But as you move in closer into Area 51, let's say this is Area 51. Okay. There's warning signs. We're down here. You see warning signs. They don't really matter. Nothing's gonna happen. You're several miles away. Okay. But as we get closer into Area 51, now the people who own this territory are watching you. And as you get closer and closer and closer, these people are like, hey, there's no trespassing here. And what do? They smack you out of this area as far as they can. Okay, they initiated a breakdown over here. Okay, getting back into Area 51. Okay, these people over here protected their area and smacked that rally right back down. Okay, picking up again, working our way back up into this part. We were good here. 66.90 reclaim was good. Tuesday overnight session, we had the reclaim of 67.34. That was, still all right. But as we get into this area, that's what you have to understand, especially if you missed it, if you missed the first entry, the second opportunity, the third opportunity over here, and now you want to jump into here, we don't know what the market's going to do. Okay, we analyze past moves and, we based our risk assessments off that. Okay, and what we've seen the past 2 times in this area is that the market was smacked down. Okay, and as I advised, heading into Wednesday's session, is that this was not the area to chase the market. Okay, so while many, are, I don't know if people were surprised on this or not, but seeing, getting into this area and just missing it by a point on Wednesday's session and getting smacked down is not a surprise. There should be no surprise in that. We were expecting that. Now, were we expecting a full retracement? No, I wasn't. Okay, but that's what ended up happening. Okay, but seeing sellers step in at this area, yeah, not surprised. Okay, and in reality, when we're trading these liquidity areas, the best time to long is down here, not up here. The best time to short, if that's the trade you're looking for, is up here. Up here. Not down here. Okay, eventually one side's gonna crack. Okay, but it's gonna take time, and it always takes time. After seeing this drop, if you're chasing short here, you got squeezed. You come back to the lows, now you're being pushed by external noise to make trading decisions, and you're saying, oh, yep, this is the end, it's gonna crack. You short here, you squeezed. Being back down here, attempting to short, you squeezed. Okay, you're doing things wrong, and you need to change that perspective. Okay, so I hope that helps. All right, so picking up where we left off, okay, is the market was trading inside of this range heading into Wednesday. Coming into the breakdown level, we saw selling pressure. No surprise, it put the market back into our support area of 67.64, and sellers, following the selling pressure here, set up a breakdown at 67.64, which triggered a weakness. Okay, putting a full round trip back into our home base. Okay, now heading into Thursday, we were trading from 66.95 down into this lower pivot here at 66.54. The market was consolidating. Okay, and sellers triggered a breakdown at 66.54, which, yeah, it worked. But where did it send the markets? I'll show you where it sent the markets. Okay, when we zoom out and we look at the market from a 4-hour time frame perspective, this is the bigger range the market's in right now. Okay, and as long as the market is inside of this range, the market's just consolidating. Up and down, up and down, up and down. It's no different. It's just a bigger time frame. It just takes longer to play out. Okay, done this several times, hundreds and hundreds and thousands of times. Okay, so losing that intraday level at 66.54, and you're chasing short, you got to be aware of what's under here. Okay, because the loss of 66.54 only set up the market to test the lower end of this range. And as soon as sellers attempted to look under, buyers stepped in and pushed the market back over, and most importantly, inside of this range. Okay, so what we know as of right now, heading into tomorrow, is, the market got rejected at an intraday breakdown level. No surprise. Okay, we broke down under 67.64, and that led us to an intraday level at 66.54. Sellers broke down 66.54 and put a direct test at the lower end of the range. And being at the lower end of the range, sellers are put in a position that for any further downside, they need to crack the market down and out of this range. In failure to do so, it just keeps the market consolidating in this bigger time frame. And as we already reviewed, the market cracked under and buyers stepped in, putting the market back inside of this 4-hour range. So, market's still in this 4-hour range. Okay. How we're going to navigate this is, one of the most important things to understand is that, we held, okay, and most importantly, the market moved at the end of Thursday's session. Remember this 66.54? The market moved back over, eventually recapturing this intraday range. Okay, so this is what we're watching into tomorrow. I talked about it in the newsletter. I'll give a quick, brief breakdown. Is, from defending 66.31, the market popped back inside of this intraday range. Now, as long as the market can hold inside of this little range here, it keeps the potential for bulls to stay alive, in terms that this only keeps the market in consolidation mode on the 4-hour time frame range. All right, and to confirm that, what we're looking at into tomorrow is the 66.92. If we can break above and start trading above 66.92, that is a big clue for us that the market is signaling strength for the session. Breaking above 66.92, longs can work. We're looking for 67.19, 67.44, and the bigger target under really good buying pressure, if that comes, is a retest at 67.64, which is the most recent breakdown level. Okay, so very big level for us to watch into tomorrow is this 66.54, 66.58. You want to maintain above it. Okay, and to signal strength, we need to get out of this range. Okay, and that sets some short-term relief. Okay, overall targeting 67.64. Now, slipping under 66.58, that's not a good sign. Avoid longs at all costs. Getting under 16.658.54 puts the market to potentially retest Thursday's low. Okay, and that's where things start to look bearish. Okay, sellers then get put in a position once again if they can set off any further downside. Puts them in breakdown mode. Alright, so getting over here, I trade traps. That's all I do. Okay, I'm very good at it. I'm watching sellers here if they can break 66.11. Okay, to set off continuation lower. What I'm watching is for weakness of it. If they break down and flush it, that's cool. We move on to the next session. Let it go. I do not chase the market at the lows. It's gonna work until it doesn't. Okay, and when it doesn't, not only do you miss a big move, but you also get punished very badly. Okay, so I avoid that. However, I am interested if sellers break down under 66.11 and fail to establish underneath. Reclaiming back over 66.11 is something else that interests me. Alright, so that's a very quick, brief breakdown. Okay, overall, we're watching to see best case scenario is the market remains inside of here. We want to find follow through above 66.92. Work back up these three targets. All right, we slip under 66.58. Drop. Don't even press that green button. We're looking to target Thursday's low, and getting into here, we're looking to see if sellers can follow through. All right, so yeah, very brief overview. Okay, so let's see what transpires into tomorrow. All right, so let's see. Yeah, all the market's been doing really is trading from this liquidity area down into this one. Okay, so let's see. This. Give me what? I had to sneeze. Anyways, but yeah, let's see if this. It's a tough trade to look for a breakdown. It's tough. Rather watch for a trap, but let's see what transpires into tomorrow.